everyone, you're tuned into Business Day right here on ET Now. I'm Avan Dabash. A look as to how the markets panned out this Monday before we take you through the top headlines. Well, mild gains for the equity markets. We did continue that up move, but it was a very tepid move, you'd have to say, on the frontliners. We were unable to cross the 6100 level on the upside, although we did come very close to that. Broader markets exceedingly flat. The market breadth reversed by the end of the day, but it was really Reliance Industries which was a big star, and you also got support from cap goods and select oil and gas stocks. By the day's close, 6,082 for the Nifty, the Sensex higher by 62 points at 20,101. Well, lots of corporate earnings as well as big stories from corporate India. We get you all of that and more after the headlines. Reliance Industries comes under the spotlight after the company announces a strong third quarter result. The stock gains as much as 7% during the course of the day, finally ending with a gain of 2%, and it's the top traded counter on both the NSE and the BSE. India's largest mortgage firm, HDFC, reports a 16% jump in its net profits on strong retail loan growth. The retail portfolio loan growth is 26%, outperforming the industry, and HDFC's Vice Chairman, KK Mistry, expects the strong growth to continue despite higher interest rates. SpiceJet surprises the market with a strong turnaround in the third quarter. Reports 102 crore rupee profit on lower fuel costs and higher airfares, compared with a loss of 39 crores in the same period last year. In a big relief to infrastructure majors like GMR and GVK, the government separates the forest and environment clearances for road projects. The delinking will help companies come out with alternative plans if they face roadblocks in forest clearances. And that's an ET Now exclusive. India will have a coal regulator soon. The group of ministers on coal meets to decide on the powers of the proposed regulator just ahead of the first coal block auction. Sources say the new body will prescribe the principle and method for pricing of coal. Straight to the action that we witnessed on Dalal Street, and it was a day where we did see gains, but it was in a very staggered manner, so the up move wasn't with a lot of fervor. You had oil and gas which clearly supported on the upside, but by the end of the day it was a bit disappointing the way the market breadth turned out. An absolute no-show when it came to the broader markets, which were extremely lackluster by the day's close. You had capital goods and oil and gas. Those were the two indices that single-handedly from the word go really led the up move. And on the downside, you had healthcare as well as real estate. That was a bit muted as a basket. Some of your top gainers, Reliance Infrastructure notched up very smartly. You had Bharti Airtel also, which did well for itself. BHEL in the limelight on the upside, but it was Reliance Industries which was your pillar of strength at a 19-month high post its strong set of numbers. Some results which came out today, we will get you the bigger ones in just a bit, but NTPC, the Q3 profits came in higher by 22% at 2,597 crore rupees, and the net sales were higher by 2.9% to come in at 15,775 crores. This time around, there was an other income component, 722 crores versus 702 crores. By the end of the day, down by 1.5%. Mastech put out a good set of numbers. The profits came in at 7.6 crores. That means that on a sequential basis, there was a jump of close to 17%. The total income was at 224 crore rupees. That's higher by a mere 0.6%. EBITDA margins came in at 9.4%, and the order book log came in at 538 crore rupees. Bhushan Steel profits came in lower by 20% to 221 crore rupees. The sales, though, came in at 2,529 crores. That's higher by 5%. Not too much of a reaction on the stock. Some stocks in focus today then. Reliance Infrastructure, you saw how it notched up very smartly. In fact, the entire ADAG pack was in focus as it plans to recommence the commercial operations of its airport metro. Aurobindo Pharma in early trade spurted up pretty smartly as it got the final US FDA approval for Oxalin injections. In terms of some earnings that came in on Saturday, you had Mindtree, which posted a good set of numbers, 98 crores in terms of the third quarter profit. That's higher by close to 37%. Sales a bit of a disappointment, lower by just about 1%, and they clocked in a forex gain this time of 14 crores versus a forex loss. So the street really gave a big cheer to that one. Kolte Patil, that came out with its numbers 386% higher in terms of the Q3 profit at 38 crores. The sales came in at 225 crores. That's higher by a good 205% on a yearly basis. From that same basket, you had Oberoi Realty, which put out a consolidated profit of 134 crore rupees. And you had the consolidated net sales this time around, which were higher by 41.7, but the street didn't digest that information too well. Finolex Industries, that also put out a fairly decent set of numbers, 30 crores in terms of the profit, so good turnaround versus a loss of 1.8 crores. And you had the sales which came in higher by close to 8%. So it was 17% higher for Finolex by the day's close. Some of the index losers, well, High Beta was a bit muted, so you had DLF down and out, Sun Pharmaceuticals, TCS, as well as HDFC. But the stock today, which was clearly in the limelight, was Reliance Industries after it announced a strong third quarter earnings. In fact, during intraday trade, it gained as much as 7%, but finally it ended the day high by just about 2.3%. Let's get Rajesh Sharma. He now joins in from our research team to tell us how exactly the brokerages read into Reliance's numbers. Ajay, what do they have to say?
Well, Reliance did, open with a big, massive gap up 4.5% at one point in time, fresh 52-week high. It closed off highs, but still managed 2.5% kind of gain in the market today and gave a lot of support to the market. Most brokerages have reacted positively to the third quarter numbers, saying that the worst is over for Reliance Industries and refining is the area which will be leading the earnings for the next 2 to 3 quarters. Petchem also, probably the worst is over. The volume and pricing growth will only improve from here on. Most of the brokerages have from neutral or sell or hold have become a buy. Some of the big ones like Macquarie go on to say that it's an outperformer. 1100 or thereabouts is the new price target which are being raised for Reliance Industries post third quarter numbers. It will be interesting to see that the Rangarajan committee recommendation, that is the area where most of the brokerages would like more clarity on. Otherwise, the worst probably is over according to brokerages for Reliance Industries stock.
We've hiked our target price by as much as 34% last week. Actually, Reliance spending $30 billion in capex, and actually part of that already beginning to flow through in earnings. We feel that Reliance's profits are poised to nearly double over the next 4 years. We think that valuation increase, a valuation re-rating is going to precede the earnings growth.
Reliance has been one of our favourites. We've been suffering having it one of our favourites for the past few years. But obviously the buyback has helped the share price, and I think we were all surprised with those fantastic results. So I can probably see even with this rise today over the course of the next month or so that we'll start to see that price get nearer to 1,000 as we all become expectant of a move in the gas price.
Going forward, the major amount of news flow which would probably drive Reliance stock price would be twofold: from the refining space and E&P space. How exactly the price revision in the gas, shale gas contribution coming in, and more than anything else, I think the revival, probably not called revival, but I think would say that implementation of 4G technology and the kind of prospects thereon would also basically drive the sentiments and the market price of the stock.
Lots of talk on the star of the monolith in the oil and gas-based Reliance Industries. But apart from that, some key results which were put out today. Housing finance company HDFC posted a Q3 earnings which were largely in line with street estimates. The results in terms of their profit were boosted by a healthy net interest income as well as stable spreads. And the company also saw strong loan growth this time around. Asset quality continued to remain healthy. Anirudh Ghosh now joins in with the HDFC numbers in greater detail. Anirudh.
Well, HDFC has put up a net profit growth of about 16%. The growth has been driven mainly by the rise in net interest income and the subsequent rise in margins as well. What we've actually seen is that their individual loan book has grown quite a bit, close to about 26% in the past quarter. So clearly that's been where they've been seeing all the demand coming from. And the management really telling us that in spite of the interest rate situation really being a very high interest rate scenario at this point of time, they've actually been seeing a good rise in demand from individual customers as well. So clearly they're not seeing any slowdown as far as the demand is concerned. They're seeing in fact a rise in demand, and they're expecting that this demand is only going to rise going forward as the interest rate scenario softens. Also, if you look at the asset quality situation, this is their 32nd quarter in which they've seen their gross NPAs come down, and their net NPAs of course is at 0% at this point of time. So clearly a good set of numbers on that front. And also if you look at their investments, we've actually seen the management come out with a figure of about 30,000 crore rupees as far as their unrealized gain on their various listed investments is concerned. Also remember that they have a huge portfolio of unlisted investments. The unrealized gain on that portfolio is close to 20,000 crore rupees. So clearly a huge amount of money which HDFC is sitting on at this point of time. And going forward, while the interest rate scenario is expected to ease, the management is expecting their margins and their loan growth to only improve from here on.
As we look at the loans outstanding on 31st of December, the total loans outstanding stood at 1,60,941 crores, which represents an increase of 22% over the loan book number as of 31st March 2011. Whilst the individual component went up by 22%, the growth has largely been while the total went up by 22%, the growth has largely been in individual loans. And the individual component went up by as much as 26%. In terms of asset quality, we continue to see improvement or even further improvement in asset quality. And we have now on 31st December seen the 32nd consecutive quarter where the percentage of non-performing loans was lower than what it was in the previous year at that time.
In terms of other results today, you had budget airline SpiceJet stock, which ended the day high by 5% after swinging back with a profit of 102 crores versus a loss of 19.4 crores last time around. The lower fuel costs as well as higher airfares aided the airline, but paying a weighted average tax of 24% on ATF prices, which is among the highest in the world, that continues to remain a challenge. Let's take it straight to Pranay Jain, who tracks the sector in more detail, to find out more about SpiceJet's numbers. Pranay.
Yeah, well, SpiceJet has finally swung back to quarterly profits after posting a loss of 163.5 crores in the second quarter of this financial year, as well as a loss of 39.3 crores in the previous year. The income from operations have jumped by about 37%, which came in at 1,602 crores. Its EBITDA also came in at 138.9 crore versus a negative earnings or loss of 19.4 crores year on year. Taking a look at some of the key operational highlights, its passenger growth grew by about 7%, largely coming in from the passengers from international flights. The fuel cost also fell as a proportion to the overall revenue, which came in at 45%. Due to the fleet optimization as well as the rise in market share, where it currently stands at 19.2% in the month of December versus 16.8% in December last year. Higher ticket prices, like you mentioned, helped garner healthy revenues per passenger, as most domestic scheduled carriers hiked fares by about 21 to 22% in the last quarter due to peak season demand as well as due to lower fleet supply versus the industry demand. The growth in fares boosted the yields, which were up by about 29% per passenger. The challenge, however, remains, like you also just mentioned, that the weighted average tax incidence on the ATF continues to be high at 24%, and this is a major challenge for sustained long-term profitability, which is why the management came in and said that they are looking at plans of importing the ATF to cut the tax expense. And to keep the growth momentum going, they are looking to add more planes, and that is why they are also open to idea of investments, even a stake sale. However, they are not in any hurry.
Thanks very much, Pranay, for giving us those details. And clearly, the stock price of SpiceJet was flying high, taking up with it a Jet Airways as well. But for the day, for the equity markets, it turned out to be a day where we were mildly in the positive, although 6,100 wasn't conquered. Let's get in a sense as to how the F&O activity shaped up today. We've got Navneet Saluja, who joins in from our research desk. Navneet.
Well, Evan, not a bad day for the markets. You at least had the January futures, which touched the 6,100 mark intraday, and you had January futures adding about 6 lakh shares in today's trading session. The futures closed with about 16 points premium to the spot Nifty, and if you look at the options data, clearly the put writing continues today as well. You had the Nifty PCR, which inched upwards to 1.17 compared to previous closing of about 1.12. Huge amount of open interest addition was seen for put strikes like 6,100, which added close to 13 lakh shares. You had the 6,000 strike, which is acting as a huge support system for the Nifty, added about 11 lakh shares, whereas on the call side you had 6,100 strike adding close to 5 lakh shares. And talking about the stock futures, well, long positions were being built up in stocks like Reliance Infra and Bharti Airtel, which surged in today's trading session. You also had underperformers like BAIL and L&T, which have not actually moved with the market. Today they moved close to 2%, and long positions were seen on the future side. And you also had Reliance Industries, which reacted to its quarterly numbers. Long positions were seen for Reliance Industries as well.
Thanks very much, Navneet, for giving us all of those details. But of course, it's a very heavy week in terms of earnings plus macroeconomic data. We will be having the Reserve Bank of India declaring their policy on the 29th of this month. Earlier in the day, we chatted with Jim Walker, founder and managing director of Asianomics, and he doesn't see the RBI cutting rates unless the government takes some real action to control the fiscal deficit.
This is the only budget that matters in the run-up to the election, because the 2014 budget will be too late. That's usually characterised in India by a whole host of populist measures to try and generate support and then keep the government in power. But of course, if it's populist measures this year, then I'm afraid the Reserve Bank of India won't be playing along. It'll be saying, well, if we don't have a consolidation on the fiscal front, if we don't see some real action to try and control the fiscal deficit, then we won't be cutting interest rates. We expect at the end of this month no change in monetary policy.
To the infrastructure space and into a relief for major infra majors like GMR and GVK, the government has decided to separate the clearances by the Forest and Environment Ministries for road projects. Now, this delinking will help companies come out with alternative plans if they face any roadblocks with one of the clearances. Suchetna Ray now brings us those exclusive details. Suchetna.
Avan, clearly it's the Environment Ministry under Jayanti Natarajan which has taken the first step towards blowing the peace pipe in the ongoing tussle with the National Highway Authority of India. What Jayanti Natarajan has done is she's given into the wishes of NHAI. She has delinked the two clearances that are required for any highway project in India. The forest clearance as well as the environment clearance have now been separated. So it means for developers like GVK, GMR, it will now be much faster that they can close the financials of the project and start the project. But of course, Jayanti Natarajan is not one who will give up her stamp of authority so easily. So therefore, there are riders in this delinking. She's put in conditions which have to be met by project developers for them to avail of this facility of the delinked forest and environment clearance. The conditions include an alternate alignment plan. If the project is passing through a forest area, this alignment plan will show how it can bypass the forest area. But what is the spoiler in this entire piece of news is that any widening or extension of any highway project will now mean that the developer will have to come back to Jayanti Natarajan for environment and forest clearance all over again.
Thanks very much, Suchetna, for bringing us all of those exclusive details. So certainly a breather coming in for GVK and GMR and other road makers. Moving on then, and just before the first ever coal block auction kicks off in India, setting up a regulator for the coal sector is a key priority. The move, which will impact Coal India and all mining companies in the steel, cement and power space, will be discussed by the group of ministers later today. Nitya Balakrishnan now joins in from New Delhi to talk about some of those details. Nitya, highlight what the latest changes are that are proposed in the structure of the coal regulator and the impact that will have on some of these players.
A thrice postponed meeting when it comes to the decision of the coal regulator headed by P. Chidambaram is likely to take place later today. But what we're picking up from sources in the coal ministry is that the contentious issue of the pricing power of the regulator is something that stands diluted in this current draft of the coal regulator. Now, what we're picking up is, of course, the power and steel sectors did oppose this decision of resting the pricing to the coal regulator, which is why this time they will go ahead, they will initiate the determination of the methodology for pricing of coal. They will also ensure that there is no monopoly by Coal India when it comes to pricing, but they've decided to leave the ultimate decision of pricing to the respective coal mining companies, something both power, steel and the metal space will be very positive about. Now, apart from this, when we talk about the framework and functions of the regulator, of course, what we're picking up is the specification of terms and conditions of mining will rest with the regulator. It will also take decisions on suspension or cancellation of prior mining licenses. Any term of pooling of prices will again rest with the coal regulator. Of course, the ultimate body for grievance redressal and dispute resolution in the sector will be the regulator, is what we're picking up. A very crucial meeting, something that has been meaning to reform the sector. And P. Chidambaram heading it later today. Details, of course, as and when it takes place.
Okay, we'll look forward to that. Thanks very much, Nitya, for giving us those details. Let's get you another exclusive piece of information. And there seems to be no end to the labour trouble at Hero MotoCorp. Workers at the company's Gurgaon plant are meeting with the management today to negotiate wage hikes. Now remember, this is the second round of negotiations that are being held. Sumit Chaturvedi now joins in with the exclusive details. Sumit, start off by highlighting what the demand is from the workers' end and what the management has conceded to.
Well, the workers are demanding over 50% wage hike as compared to the wage hikes given by Maruti and Honda Motorcycle recently to its workers. So as we speak now, a crucial meeting is underway in Gurgaon between Hero Motor management and workers to decide on the wages. Well, workers have threatened that if the wages are not given as per what they are demanding, they will go on a slow down kind of protest against the company. Well, currently they are having soft protests that they are boycotting certain activities of the company and wearing black badges. But they are threatening that if the management is not agreeing to their demand now, they will go slow on the production, which means a hell lot of trouble for Hero Moto. Well, there are currently around 5,000 workers in Hero Moto's Gurgaon plant, which is the oldest plant of the company as well. It manufactures between 7,000 to 8,000 bikes every day. So if it stops or if the workers go on a slow down strike, it's really going to create a hell lot of trouble, because then Hero will not be able to produce enough bikes to sell in the market, especially when it is facing stiff competition from the rivals like Bajaj Auto and Honda Motorcycle.
Okay, thanks very much, Sumit, for giving us all of those details. In fact, staying with the auto space, Rajiv Bajaj, Managing Director Bajaj Auto, is looking at new launches that will drive volume growth at Bajaj Auto Hire. He also says that he is looking to tap newer markets in South Asia.
Right now, we are going to end up pretty much where we were last year in terms of total sales in units being about 4.3 million units, exports being about 1.5 million or a little more than that. So there's really not much to show in terms of growth. As confident as one can be in these competitive times, that Bajaj can stay in the 20% zone even as it moves to to grow and to grow its market share. At this stage, getting into scooters would not be a de-risking strategy. It would simply be a distracting strategy, because when you have 10% market share in one segment, and incidentally profitably so, you have a lot of headroom to grow. Finally, we have a great deal with Kawasaki.
Okay, that brings us to an end of this edition of Business Day. Thanks so much for watching. Stay with ET Now for the latest news and updates.